Do you know if JP Morgan's 750 million ounces of silver is held on their balance sheet, or is it held in the name of their clients?
That I don't know. All I can tell you is just Google Economic Times article. The Economic Times is reporting that JP Morgan holds over 750 million ounces. I believe it would be their own house account. I don't think it would be in the name of their clients. But I'm not positive on that. The way that the article was framed made it seem as though that it was theirs. Now, which is an interesting question, because Blythe Masters said, we don't do this for ourselves. We do it in the name of clients. So, okay, let's play that out. What if one of their clients was the Treasury Department or the Exchange Stabilization Fund? Who knows? I'm just saying, could be. Wouldn't surprise me if they've now made silver critical mineral, and this kind of stuff happens right after, not only the massive deliveries before and after, but JP Morgan flipping and having this. It wouldn't surprise me, because I wouldn't be surprised if that's how they bring in a bunch of this stuff to keep it quiet, so that it's not being directly attributed to the Exchange Stabilization Fund or to the Treasury Department or to any big trader. So it could be. I don't know. Good question.
What's the worst case scenario for SLV holders? So I think they're talking about holders of that specific ETF.
Well, if you read the prospectus, I'm doing this from memory, pages 6 through 12 titled Risk Factors. Read it twice. Sit down with a couple of glasses of wine and read it 4 times slowly. You'll see why attorneys who create these prospectuses get paid so much money, because they're very, very difficult to read. But there will be things in there such as the custodian, i.e. JP Morgan BlackRock, has the right to use sub-custodians to store metal, and they are not responsible for the errors and or omissions of said sub-custodians. They don't get to visit the premises of the sub-custodian vaults. If the sub-custodians are holding bars that do not meet good delivery status, they are not responsible. So they could be lead bars painted silver, or in the case of GLD, lead bars painted gold. SLV, to me, I've always thought would be a wonderful way, kind of a Trojan horse. If you think about it, when I was, we go back to the 90s, before the internet. When I started this company in 89, there was no internet. There was no Scottrade. So stockbrokers made a portion of every trade you make. And so when you talk about the internet coming along, and now they keep money under management, instead of, you get free trades, and Scottrade for $9 made stockbrokers go the way of the dodo bird. So they became financial advisors. I used to be one. Let's just simply get this out there. Unless you are a certified CFA, a regular financial advisor is someone who passed a Series 7 and then a test on ethics, basically 100 questions on how or how not to screw someone. You don't even have to study for that test. And you too are a financial advisor. The Series 7's tough, don't get me wrong, but they will think of every reason to tell you to buy SLV and GLD over taking that money out of the umbrella now, because it's under management. They make a percentage of. When that money leaves, it's gone. And so they'll tell you to buy SLV and GLD. So as a result, you get the largest silver stockpile in the world in SLV, held by JP Morgan and BlackRock. JP Morgan, who paid a $920 million fine for spoofing the metals market. Many people thought they should have been blown up on RICO charges, that they got off easy. Their head trader, Michael Nowak, is still in jail for it, but yet they're still allowed to be the custodian of the world's largest silver trust. What I'm getting at is this. People say, are we going to see confiscation? I think it would be much easier. Who is the primary custodian of SLV and GLD? BlackRock and JP Morgan, for the most part, in GLD. A little bit, I think, of HSBC Bank, but the majority is them. And in SLV entirely, they come in on a Friday night and they take it. Now, you and I can't take it. You have to have a basket, which are basically the commercial banks who fund it. We can't take possession of it. So you wake up Monday morning and your money market account has got $2 million in it, $1 million from SLV and $1 million from GLD that you had in there. And they say, what? We didn't break any laws or infringe any civil liberties. You can still buy physical metal. Call Miles Franklin. Call anyone. We just closed these 2 accounts. Now they're sitting on the largest stockpile of silver in the world, next to the 750 million ounces they supposedly hold, which would be number 1. And then, one of the largest stockpiles of gold in the world, without having to go door to door and risk the backlash that they would get globally of the world reserve currency, the beacon of light and liberty in the center of free trade, confiscating their own citizens' metal. No, they can take these two accounts and have it all centrally held in a vault, the pink bow wrapped around it. That's the worst thing. They confiscate it, and you're kind of out in the woods. You don't have exposure to it. Now you got to go buy it at a higher price.
Right. Yeah, to me that's the confiscation risk, which is, Willie Sutton. Why do you rob banks? That's where the money is, right? They're not going to go hunt down millions of people and try to get a couple ounces that they might be having in their households. They're just going to go to these big repositories.
Patriotism isn't what it was in 1933, and most of the people who own metals probably believe in the Second Amendment, and it's not something they want to do. Whereas here, it's just held cleanly and neatly and easily, and the prospectus says you can't possess it anyway, so they do it, and it's just clean and easy. Go buy the real stuff, you're okay. That's in essence what they could do. To me, that's the threat.
Okay, so to the second half of the question here, one, he says, look, I sold half my position, I'm looking for options, maybe I'm going to buy an ETF in copper or oil. Folks, Andy's not a financial advisor here anymore. If you want some assistance in talking with a financial advisor about other potential instruments to own besides the precious metals, hey, go talk to your financial advisor if you have one, or feel free to talk to the ones that Thoughtful Money endorses. You can do that. As you hear me say all the time, just fill out the very short form at thoughtfulmoney.com. But Andy, if he's looking for help in figuring out better ways to, or different ways to own silver or precious metals in his retirement account instead of holding SLV, he can talk to you and your team about that, right? You guys advise people on that all day long, right?
Yeah, and the cool thing about a precious metals IRA, and that's not a fair way to call it, but it's what it's called, because it's an IRA that allows precious metals physically in it, amongst other things. You could own, if you wanted, copper. I personally own a stock called Freeport-McMoran. That's a copper stock. Okay, well, again, I'm not a financial advisor anymore either, but that's how I play copper. But if you have an IRA with one of the custodians that offer IRAs, I like New Direction in Louisville, Colorado. I make nothing new there, but they've been great to me and my clients. You move your IRA over there, and now you can buy physical gold and silver held in a depository. Now, the coolest part about the precious metals IRA is the distribution feature. If you are invested in ExxonMobil and you want to take distribution of your IRA, you want to do in kind, they're not going to bring barrels of oil to your driveway. But with the precious metals IRA, well, you can liquidate it for cash. You can liquidate it for cash and go to another investment like NVIDIA or 10-year treasury, whatever you want. Or you can say, you know what, I'm going to take a distribution or a liquidation. Give me my gold and silver that you're holding in a segregated account for me. Boom, they ship it to you. It is a taxable event. But yes, you can do that with the ability to possess it. In the ETFs, you never have that ability. So it's a pretty neat way to make a bigger splash in the precious metals pool without writing out a bigger check. You just take some of your IRA money and use it, physical metal.
Do you foresee businesses accepting silver and gold as a form of payment, or maybe some sort of gold-backed crypto like PAX, for example? I mean, I know there are all these things out there like Glint, right, where you can basically use precious metals to buy things. It kind of operates like a credit card or debit card. But maybe to the spirit of the question, do you think the world is going to wake up to the fact of, hey, you know what, these things are really valuable, and maybe I might want to have them more than the pieces of paper with the dead presidents on them? And a business might say, officially or even unofficially, yeah, this thing costs $50, or if you want to give me, an ounce of silver, I'll take that too.
Yes and no. I mean, the laws that have been passed in 11 states, and Glint is a good option, and I've been talking with others about other options that have been presented to me. But the state of Texas, I think, leads the way, and Florida's not far behind it, I think. But Texas has the infrastructure already. What I think will happen is, and a lot of these states say only American-issued coins, so let's just play that out. So let's say you have, 100 gold eagles and 5,000 silver eagles, whatever amount you have. In Texas, what they're going to do, I believe, is you will take, now the law says that American-made coins by the U.S. Mint would be legal for all debts, public and private. Now, I guess you could walk into a store and negotiate it. They all say they are not required to take it, but if they will, yes. How are you going to get change? All that kind of stuff. Instead, what I believe they will do, and there's a lot of talk about this, and I think Florida will follow suit because their laws are almost identical. Florida used the Texas law as a guideline, is to create a state-sponsored depository like the Texas Bullion Depository. You take your metal, you deposit it into the depository, you get an app on your phone, just like Glint, or a credit card tied to it. And so the only drawback is you will have federal capital gains, not state. The state will say if you use it in commerce, there will be no capital gains. Hopefully that gets, rooted out or lobbied out of the federal tax deal. But you look at silver up 100% this year. Who cares? So yeah, you're going to pay those taxes, but who cares? If your dollar's down 10% and the dollar index down 100% against silver, so it would allow you to retain your purchasing power, to use that metal in the depository that is then in essence digitized to your phone. So anytime you spend it, it just starts to come down, but you have the ability to spend your metal. I think that's how they'll do it, because it's not really probably smart for people to be walking around with pockets full of gold coins trying to trade these days. Even though that is kind of part of the law, they're going to make it more convenient. And I know the people here in Florida that are doing this, and I've talked a lot about this because of the way that they had verbiage in storage. For people who have storage accounts, if you are doing it in the form of transactions like this, you have to be a money services provider. And if you're just storing it like we are for our clients, you don't. So I know where they're going with this. They are in essence saying if metal is held in a vault that will be used on a digital application, you have to be a money services provider like American Express. It's a multi-million-dollar annual, endeavor. But if not, yeah, it's that's what they're going to do. They're going to use a digital application backed by your metal, held in a vault in those states that have approved it.
Okay. I'm just going to ask you to just totally guess here. 20 years from now, will precious metals be remonetized? Maybe not backing the dollar, but will there be an alternative way to pay that is accepted statewide and federally?
I think it will be. I think it's being remonetized and reintegrated into the global monetary system. 1,000%. It won't be like it was in 1933. Maybe it will be. Maybe it won't be. But things go full circle. They don't always repeat, but they sure rhyme. And we are moving in that direction. It's being reintegrated into the global South as a form of settlement instead of using the Treasury. It's outperformed the Treasury for 25 years and handily over the last several with no counterparty risk and no sanction risk. And it is the neutral asset that seems to have been chosen to lead the remonetization or the reintegration of new monetary policy. And in the United States, I honestly, truly do believe that it will have something to do with the back end of the Treasury market, as Judy Shelton has talked about. Whatever it is, whoever's importing all of this gold believes it to be very important. So yes, with all the state legislation, with all of the move to the global South of it replacing the Treasury in essence, with all of the imports here by the most informed and wealthiest clients or traders in the world, something big will happen. And I think it will happen sooner than that, to be honest with you. But yes, I do. I don't know to what degree or how it looks, but something bigger than the mainstream would lead you to believe.
All right.